We need to jump into the Nasdaq 100 and the SP 500. There's about 40 minutes left on the trading day. I have to make this video a little bit sooner than I'd like to, but let's get into it. So what we looked at yesterday and what we talked about. Now, the first thing I want to do is take you over to Twitter, and I'm not doing this to say I'm right. I'm not doing this to throw this in anyone's face. I'm doing this to show you that there's a little bit of proof in what we do here, right? Because I want to let you know, and I like to fall back on previous ideas and previous theories to show if it's working in the market. So what did we look at yesterday? We looked at possibly getting a push back up to 11,000 and then dropping into our supply. This was the plan. I posted this on Twitter and I covered it basically in yesterday's video. Now from there, what happened? I posted the picture as well. Basically picture perfect, come right up to 11,000, reject back down. So this is what we're looking at on the market, and ultimately it's playing out to a T. You have a few people kind of worried, are we going to keep dropping, or are we bouncing here? And I just kind of want to let the, set the notion a little clear, and that we're still going as planned. You dropped back up to 11,000, about 10 points off, and then boom, right down to that level, almost to the T at 10.7. Now, if we zoom out a little bit more, you can see our COVID lows on the mind, but our lows 52 weeks are about 10.5, about 200 more points, and I do believe we're going to hit that area specifically on the Nasdaq. Now, if you haven't been here for any time, then you may not understand. There's a little bit of a difference in things we look at. We have the Nasdaq, which is primarily tech. We have ES, which is the S&P futures. And then, of course, we have YM, which is the Dow Jones. And if I had to rank them in strength comparisons, Dow would be the strongest, ES is mid, and then obviously Nasdaq is the weakest. I believe tech is the most at risk. Now, before we go any further, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm going over the market, what I'm looking at, and I know the thumbnails may be a little bit clickbait, but let me tell you right now, when you get into the channel, when you get into exactly what we're doing, then you know I'm consistently unbiased, giving you what I'm doing, but also telling you both ways of the market, where to trade based on supply and demand, so you are not taken by surprise at all. Also, so you know, the Discord link is down below for every single trade we're taking. We also have the mentorship and everything in between. I recommend this if you're looking to get serious with trading. That link is down below. But of course, I offer a lot of free information, specifically on Twitter and on YouTube. Let's get into it. So looking at these, ES, I will say ES, which represents SPY, you can see that we're still operating based on the plan, rejecting, continuing to come down. I will say you need to go out to the 4 hour to see ES's clear levels, and we haven't hit that yet. But what I will say, on the 200 MA for the 4 hour, you're getting below it and holding. This is weak. Also below 37.50. We're going to talk about that area here in a second, but you're continuing to hold down. I believe this is still showing weakness. I do want to highlight that. Yeah, you're getting a bounce, but I just want to highlight that I still see the weakness. Okay, you can go back to previous moves to where you'll get a bounce into Thursday and then continue dropping into Friday. Now, am I saying tomorrow has to drop? I am not, but I still believe in the downside thesis. And before we go any further, I also want to clear the air. We hit our exact targets on NQ, so I did close my QQQ puts. However, I'm still looking to get into more trades, and I'm going to go over one trade specifically that I believe has the most upside potential here in the next few minutes. But before we go any further, I do want to highlight some news coming in tomorrow, and this specifically I believe will affect the market most of all. Your unemployment numbers at 8:30 Eastern. This is going to be big. Also, non-farm payrolls. These are going to be your biggest factors, because if you remember what Powell was saying, the biggest factor into slowing down rates to really seeing a pivot in the market is going to come down to employment. This is the biggest factor. We can't start lowering rates, and inflation won't be handled until employment starts to lower. You need to see unemployment rise. These are issues that have to take place, and we've been talking about them here on the channel for literally the past 3 to 4 months. And so far, from what Powell said, nothing has changed, and you can get those information and go through and scroll on Twitter as well if you want to see that. So going in here, I want to talk specifically on NQ and where you're trading as we speak, going to a little bit of the lower time frames. On the day, what I will say is you did come down. You can see at open 8:30, we drop, make a low at 10.7, and now you're kind of just chopping for the rest of the day. You're making a little bit of overall pennant, but I do believe we're going to see some of that downside. I'm going to continue to stand by that viewpoint until we get some good type of data. Until that happens, you have to be a bear here. You're also holding that level, and you can just see it maybe a little bit more clear here on trading view, but you can see you're holding that bottom there as well. So I want to see if we get rejected and stay below VWAP and continue to push down. That's the most ideal area here. That's what we're looking for. Obvious as well, you're looking for that touch of around 10,486, your previous lows from October 13th. Now I do want to address something before we go further. The large targets, what we're looking, across the board, where we want to see us go. Remember, the overall target here has not changed. We're looking at pre-COVID highs. That's what we want to see, around 97.68. I will also take, in the shorter term, around 10,000 to 10.1 to be tested as well. I think this could be a monster area and will probably have a lot of support at this area as well. I don't think you're just going to drop through. I think you'll probably get a little bit of chop there, but end goal, obviously pre-COVID highs. Food for thought is if you look at something like, the Dow. The Dow has already hit that level. Pre-COVID highs, you already tanked below it. But it's worth mentioning the Dow did not have as good of a run from 2020 to 2022. Okay, so those are things you have to take into account there. ES, I will say you got a little bit closer to that area. If we look at how you're moving and where you went, you did get relatively close to that area. You almost, got to that touch point. So I do want to highlight that. And I believe the next time you break this low, you will test that low right there, which was your previous high from 2020. Okay, that's the big point there. Now, what I do want to go into a little bit more is something that some people may not be looking at totally on the market. If we look at how you've moved back up, and if we look at the retracement that you have now, I do want to highlight, I'm not looking at fib levels necessarily. I just want to give you a ratio into, where you're at as we speak. And if you look here on this move up, you're about halfway back down to where you were, right? So halfway back down to lows. And if I give you the viewpoint of NQ, it's going to really paint the picture of how weak, we really are here. Because if we come in here and we go over this, you can see just from these lows right here all the way to the highs, you're almost, over 70% of the way there. You're very close. You're probably one good bearish day away from testing those lows. So that's where we're at right now and how I see us just going forward. And it's clear tech was the play on the puts. And so far, that's kind of where I have to keep my focus as we speak, specifically on the indexes. Things like CAT, Boeing, the industrials, those are going to continue to hold up and do the best. And that's proving to be the safest area to have your money. Now, tech, has proven to be the riskiest area overall. Now, there's some big points we need to talk about when we get into some of the stocks. So stay with me. But before we get into that, I want to talk about the dollar and some of these fundamental viewpoints also. Now, if we look at the 15-minute, this is where we're just going to stay with for a second. As you get in here, these are all the same levels that I've been covering on Twitter. I make a very big emphasis on Twitter because I cover all of this for you, right? So if you go into Twitter and just look at what we were highlighting here, right? You can come in DXY. This is October 31st. Remember I highlighted down here? Same here, same levels, nothing has changed. Look at today, look at where we're at. Mounting these levels. I put these on there absolutely free. Don't charge anyone, just so you can stay up to date also. So I just want to make sure everyone knows that's there. It's all on Twitter. I post randomly throughout the day. Like I told everyone in the live chat earlier, is I do these typically just have alarms and just come back to the market, and I'm always posting so you can stay ready on the market, right? It's not just YouTube, it's Twitter as well. So going in there, these are big concerns, and people continue to say, you can even see that comment. Someone's like, it's a bear flag. That's not a bear flag, just so you know, it's not. Google what a bear flag looks like. But if we come in here, I want to highlight yields. Also, yields continue to rip, continue to be bullish. You can see them overnight, right? Yeah, this is a Wednesday. Big rip up coming into the market, a little bit of a dip, but I believe we're going to continue moving towards the upside, right? If you come in here also, for the past 2 weeks, I've been showing you, you're making higher lows here on yields on the 10-year. You're about to get inverted. Once again, if we look at the 10 versus the 30, I don't just, talk about these randomly. These are clear indicators on the market. Again, you can see, boom, holding the trend to the upside. And again, I know some people are new here. This should not say to recession. I'm just actually going to delete that so it never happens again. But I do want to highlight, if you're looking here, The only times this has happened is during big market crashes and recessions. 2018, this should have been bigger. I'm not going to go into that right now. If you're in one of my lives, I'll go over it. Your housing bubble, 2018, dot-com bubble, 2000, right? So this is where you're at, and this is how we're moving. And, you're going to be talking about this for the next few years and how you could have traded this. And this is where you are. This is the best indicator overall for myself on the dangers of the economy. And it's still signaling that we have significant downside, in my opinion. Okay, so that's the overall indexes where I'm looking, where I see us going. I would still be betting on downside on Qs and basically every index. But going forward, what do we want to see? What stocks are we liking? What are the hot picks? Now, let's get into it. My favorite right now is Microsoft. This is the worst chart there is. This is the worst one. This is brutal. I told you yesterday, this is one of the stocks we were looking at. I think you have to be looking at some of these stocks that are breaking local 52-week lows, because I believe there's more downside coming on tech. Now, am I telling you to YOLO and go heavy? No, you need to do your own DD, do your own research, find stocks that have downsides, find stocks that are giving out bad overall information when it comes to the market and their stocks specifically. We're going to talk about one here in a second. But Microsoft, I believe this has significant downside. I think this is brutal, one of the worst charts that there is, and I think it's ready to break. It could hypothetically get a bounce, but right now I think it's brutal. If you did somehow get a bounce and the market started to get some type of recovery, I'd be looking for a rejection at the 220, 221 level. Besides that, I honestly think you're not going to ever see that test anytime soon. I think you're going to see a drop before you see a retest. That's my personal opinion. But going to a larger frame of where you are and how you're operating here. If you go down to pre-COVID lows, which we've seen a lot of these big tech companies testing, pre-COVID lows, just so you know, or during COVID lows, is roughly, this is just absurd, is 133. Pre-COVID highs, which is a heavy target for most stocks I'm looking at, is 190. So I believe you have room down to 190 minimum. You have a few resistances along the way, about 212. And then you could argue 200, but that's just a major significant bullet point when it comes to the stock. But overall, again, one of the weakest stocks, I believe has tremendous downside. I hate it right now. Next up is going to be Tesla. If you do not know, just going to quick Google search for you. Tesla prelim deliveries. This was pretty awful, people. Pretty awful. 9 hours ago, Tesla China deliveries fall in October from a record high. So basically, if you don't know, they shipped out 71,000. I believe the anticipation was closer to 83 or 80-ish, give or take. So they didn't miss there. What happened the last time Tesla missed? They got slapped. I will highlight also getting rid of all these key levels just so you can see the pretty chart in here. I want to highlight where you're at and how you're moving, okay? Just so you know, I want to make it really clear. It looks very much like you are flagging, and you could say this essentially for the entire market, but I just want to highlight, it looks brutal, it looks bad. I'd be definitely looking for a test of the $200 level. If you get below and break below 215 again, I think that's your entry opportunity, but ultimately that's what I'd be looking for. I'm not looking to just slap the ask and get into it. I always have a plan, and again, if you're in our lives, I do lives occasionally here on the channel. Make sure you just have the alert set up because I'm always going over charts during those. No type of donations are needed or anything like that. But if you get in there, I'm always going over my trade plan, what I'm looking at on the market, and different setups across everything, right? But when you get into these stocks, you have to have a plan. I don't just say Tesla looks bad, so I'm going to enter it. No, I'm looking at indexes. I'm looking at what's happening in the sector. Is there news, etc.? You need to be looking at and have key levels to be watching. So for instance, what I would be watching for here, I would look, one, to see weakness on indexes tomorrow. You could try overnight. I think that's just really risky. But ultimately, you want to see a break below 215, 214.5. Get below and hold that. If you can hold below that, it's going to be brutal. I also do want to highlight, you're holding right now at your previous lows that you established back on the 28th last Friday. You're holding below, getting rejected all day long. So I am acknowledging the weakness here. You have to realize what's happening. I'm not having any big positions like I did with Qs anymore. I don't have the big boy positions. Those did profit very well. But right now, it's more about getting back into the swing of day trading and riding this back down, because we have to understand a pivot will come eventually on the market. You will eventually see some upside, but I do believe you're favoring the downside as we speak. I do want to talk a little bit about earnings. Tonight we have PayPal and Square or Block, whatever you want to call them. I think they have downside. I do, but I'm not betting on these. And I know people are gonna have questions about these. PayPal, if they come out bad, you will test COVID lows. I mean, our previous lows down here. 68, 67. If you beat, it's easily could come back up to the $100 level. So to me, I think the upside outweighs the downside here, so it's not worth it. SQ, this is more interesting. If earnings miss, I think Square is in trouble. I think this could get brutal, and I do think Square would be in pain. If you look at where you're at, your lows you have right now about 51.38. If this level breaks, it's gonna get nasty. You use the daily chart, you have to go way back, and if you come back to your COVID lows, again, you have to. That's the key area that I've been looking: COVID highs and COVID lows. If you look there, it's around the $31, $32 level. This could get nasty. I do want to highlight that so you know. And if you see here, if your COVID highs, look how you respected. You dipped, bounced very strong, and you ended up flipping it and getting rejected there also. So understand these levels are important. These are levels that I'm watching though. Do your own DD. Make sure you're researching what you're doing before you get into it. Use me as an indicator if anything. But right now, if this level breaks, I have to target the $32, $33 region. And I think Block could get hurt, especially with what they do in regards to small businesses, where a lot of their business comes from, and they're also trying to get into crypto and do all this stuff. I think they could be hurt specifically. But again, I'm not taking the gamble. I'm waiting for the reaction, and I think you don't have to gamble right now. You can wait for the overall earnings and then react and trade based on that also. So those are things I'm doing. That's what I'm looking at the market. I'm keeping it pretty simple right now. I do believe more downsides coming. I'm sorry I couldn't make this at the end of the day. It is what it is. You're seeing a little bit of bounce here going into the end of power hour, but again, I am a bear here, and I do believe downside is coming.